Yeah, we can start, Pramod Bhaiya.
Sure.
Friends, welcome to ACA CS Study Circle. I welcome you all over here in this important topic. Friends, we all have been doing audit in this COVID scenario, and COVID being a new normal, but there has been some aspects which were there, and many people had this confusion during the signing of the financials as well. And few of the financials has not yet been signed because of the extension of dates. People are still waiting for the last minute, as we always do. In few of the financials, I found that in the emphasis of matter, we gave an emphasis that we have done this audit with the digital platform and the documents were not physically seen, etc. So this was really shocking to many professionals, because whether such a disclosure is required, if we are giving such a disclosure, whether it is a opinion we are giving opinion, or it is just disclosure of or disclaimer of opinion that we are not able to give an opinion as documents are not available. Many a time we have this confusion whether audit reports are applicable for LLP partnership firm, or we have to only sign the tax audit report. There is no separate report required for the certified balance sheet which is signed for tax audit. And how to do physical verification in this COVID scenario with video cameras, which some of the firms are practicing. And what should be the basic checklist? Because audit not documented is audit. Important session, I would say, is with us none other than Ms. Sipriya Kumar from Chennai. She is a past former Central Council member, and the person who has been doing this day in, day out, following all the checklist. So without further delay, I would request our co-convener Pramod Ungta ji.
Hello.
Yeah.
Shall I start? Yeah. Hello. Good evening to all of you, and most welcome to Ms. Sripriya Kumar, who will be delivering her deliberation on the subject. Sripriya Kumar is a practicing chartered accountant by profession and managing partner of SPR and Company, and was until recently an elected member of the Central Council of the Institute of Chartered Accountants of India. She worked with Ford India Limited and PricewaterhouseCoopers before commencing chartered accountancy practice in 2001. SPR and Companies are new generation practice services that reputed clientele largely in risk, IT consulting, corporate laws, and foreign trade. She has served on the board of companies of reputed groups such as Repco and Indian Bank, and was also a nominee director of ICI in the Accounting Research Foundation and XBRL Limited. She has been involved in execution of R&D projects for government-owned enterprises such as Indian Railways and Tamil Nadu Civil Supplies Corporations. She was a member of the South India Regional Council for the term 13-16 and was Central Council member for the term 16-19. She has served on the following committees, namely Executive Committee and Management Committee, Examination Committee, Corporate Laws Committees, and several other committees she has chaired. With this, I welcome Ms. Sripriya Kumar and request her to please, platform is yours, ma'am. Please carry on. Hello.
Yeah. Thank you, Bhaiya.
So thank you very much for this opportunity. And as always, I'm very, very honored and privileged to be here today. I see about 85 people on this participant list, and it feels very energizing. And one nice thing that this COVID has done is I think we've moved on to e-learning, which I sort of started in a small way. We got about 6,000 users and we clocked 1 million minutes in 2018-19. So the push for e-learning has happened so rapidly. And I think this is so convenient because you just sit where you are and then you're managing to learn instead of having to travel physically. So thanks once again for this opportunity. And I've been given a very structured kind of format to present on today. So in some sense, it's very helpful because it tells me what the audience wants in terms of trying to understand. And in all this, I must admit that I'm the biggest learner, because if I'm asked to present on standards on auditing, then I open 230 and then I read it once again. And every time I read something, I notice that I read something, there's something new for it to come back to me. And today, when you read it in the context of some NAFRA orders, which have come in the case of certain large firms, you learn to appreciate your own standards on auditing in the manner in which a regulatory authority is expecting you to read and implement the standard on auditing. The way the NAFRA judgment, the order was passed, is it looks like your standard on auditing is no longer just a standard. They've interpreted it very legally, line by line, clause by clause, as much as one would interpret, let's say, an insolvency code or a Companies Act. So with these few words, I go into my presentation. I'm going to share my screen. So I hope you can see my presentation.
Perfect, ma'am.
Yeah. And my bandwidth is generally good. So if it looks like it's off, I'll switch to another network and I might go off the video. So we're going to talk about matters relating to audit and documentation. And audit is a pretty much agnostic term. Whether you're auditing a proprietorship, a partnership, or a company, your standards on auditing apply. It's only that your accounting standard application and how you present your accounts, your Schedule 3, your accounting framework, which differ from one entity type to another. So what are we going to talk about today? We're going to talk about basically three things. One is actually audit documentation. And I think that's very important, and that's going to be for a major part of my presentation. We're also going to talk about specific safeguards in the context of Companies Act 2013. Some, most important things that one needs to know while signing off a company. And the third part of my presentation, where I had a special request, was that I had to, speak a little bit about how do you handle physical verification of inventories, especially when, it's offline. You're not at the client location, and how can you use technology to make it happen? We had a little story to share. In my own firm, we had sort of implemented this for a client who wanted us to do physical verification, but we couldn't go there personally, so we developed a small app. So I have my colleague who's very adept at it and whom I've requested, his name is Aditya, to present for the last half an hour. And once we developed it, we found that we were able to use it for our non-audit clients also who wanted this kind of help, and to some other CA firms also who wanted this app so that they can sort of use it. So coming to the part one of my presentation, which is possibly the bigger element to be dealt with today, is in terms of audit documentation. So without much ado, let me straight away glide in to what is the landscape today. See, the landscape today post-COVID, and not just post-COVID, is extremely complex for an auditor. So much so you can just change your name landscape to landmine. It's that significant and serious. Couple of things that make it important and very dramatic are, one, a lot of us must have known that the Companies Act 248 provides for a strike-off of companies. I think it's 248(1) and 248(5) with its implications in 248(7), where the Ministry of Corporate Affairs has gone ahead and, I'm told, struck off some 6 lakh companies off the rolls. And very tragically, I have seen some auditors and some directors actually sign off or even on such struck off companies which actually don't have a legal validity as of that date. So the first important thing is this MCA action that has, sort of moved 1/3 of the companies which are registered in India outside of the gamut of a legal vehicle for the moment until they get restored back, and people are waiting to watch. 2 is a significant COVID risk. COVID risk in terms of, its impact on a breakdown of internal controls of a client. That's easier to handle because somebody says, okay, you approve this invoice, it's not getting approved. Somebody sends it on the mail. Somebody passes a transaction. And secondly, COVID has a much larger impact, which is a management override of control. It's obviously very stressed, and today, the jury is still out. RBI is talking about loan reschedulements, loan moratoriums, gone right up to Supreme Court, how the markets have to be protected, how customers have to be protected by banks, financial institutions. in this landscape, the second thing is the tendency of somebody to materially misstate a financial statement, both intentionally and inadvertently, is a lot higher. And that's your COVID risk for you today. Now, both these have presented some very complex. And the third important thing is the way the regulator looks at you today is very different. And I go back to the aftermath of the NAFRA orders, where my own understanding of what is expected out of an auditor has significantly changed after my reading the content that's put out by NAFRA. I'm not today for one admitting or opposing whether such standards should be the gold standards for this profession. But I think as a profession, given the height of risks that we are confronted with, it must make sense for us to move into what I'd call as better practices. Forget best practices. If we believe we are already on best practice mode, we need to move to the next level. And that's something that would have to go in to what the regulatory expectations are. And another very interesting thing is there's going to be a lot of, today, when everything is hunky-dory, nobody is looking for your audit report. But when things go wrong, very often the first statement is, what was the auditor doing? So that's the other thing, the third thing, the strike-off being one, the NAFRA and the COVID stress being the other two. The fourth important element is actually the market perception of what an auditor should do. Now, we now inhabit a country where there have been absolutely large regulatory failures. There have been, corporate governance failures. The boards have failed to supervise effectively. The very credit rating agencies which are supposed to rate people have, buckled under pressures, threats, and incentives, and it's all in the public domain. I think today the market perception of the auditor is something much larger than what the institute intends, or the CA Act intended us to be in 1949. These are what you have to remember in mind when you audit any entity. And today, if I have to be even more aware, that's in the context of what I'd call as public interest entities, which are not really clearly defined. But if your client, whether it's a sole proprietor or a partner or an LLP or a trust, has significant public interest, they have borrowed funds, or they have a lot of employees, or they work for a social cause, then there is a heightened public interest. And those kind of companies need to be just audited very, very strongly, very, very linearly, and in established principles of your accounting standards and your auditing standards. So it's in this context that, the requirement of audit documentation. Somebody said, I exist and therefore I am. So today, as an auditor, your existence is demonstrated by your working papers, nothing else, which can speak about the quality of the engagement and the quality of your conclusions. The only thing that can stand testimony or evidence is your audit documentation. So with this, we briefly go into what's an audit. An audit is merely an expression of a true and fair opinion or otherwise on the financial statements of an entity, whether profit-oriented or not. And in doing so, the management asserts about the financial statements. It says, okay, existence, rights and obligation, completeness, valuation. All these are attributes that must exist in a financial statement. And the management tells you, okay, here I'm giving you my fixed asset number in my trial balance. That's 100 crores. Now, this 100 crores of assets exist. They are not impaired. They belong to the company. The invoices are in the name of the company. The title deeds are in the name of the company. The obligations to such assets attach themselves to the company. They are accurately recorded. They are completely recorded. They are physically verified. They are available. They are not obsolete. So those are the assertions that the management makes. A purchase has been completed. This is a consummated transaction. Material has come in, GRN has been raised. Now, as an auditor, what do? You perform certain audit procedures to establish whether the assertions are indeed correct. What he's talking about is correct. Again, the term correct here is in relevance to an assertion, but as an auditor, your primary task is not true and correct, it's true and fair. And that means true and fair only presupposes two things. One is the financial statements have been prepared in accordance with any applicable framework. And two, that your financial statements are free from material misrepresentation, whether due to fraud or error. And those 4 risks that I spoke about assume great, sort of significance, because your COVID risks, your strike-off risks, your regulatory risks, your stress in the market economy today, all contribute to audit risk, which is your non-detecting a material misstatement. Now, I do audit procedures to satisfy myself. And then how do I put those why do I do audit procedures? Because audit is not an exact science. It's an expression of an opinion. So for me to express an opinion, I need to have audit evidence. It's not like some mathematical model you put in and then it says 80 is your audit score. I'm required to present an opinion on the truth and fairness of financial statements. So today, when I present an opinion, I need to have a basis for that opinion. And the basis for that opinion is the audit evidence, which is a sheer and a sure must in the conduct of an audit. Now, all this audit evidence that you gather has to go in somewhere. And that going in somewhere is your audit documentation. And hence, I lead you to this topic today, which is Essay 230 on audit documentation, which is the first part of my presentation. Today, again, while some of this might look like, straight off the inter textbook, it's in fact not. These terms are, sort of your first principles, like your building blocks, like your Dolch sight words, like your alphabets that make up for a vocabulary. You have these terms: inherent risk. What's inherent risk? It's the inherent risk of any component of your financial statement to get misstated. Cash can get lost, but the management may not want to report the loss, and they just show a cash balance. That's an inherent risk. Inventories can get stolen. Something may get, fraudulently reported. Something may get omitted. That's an inherent risk. Control risk. Now, in order to manage a risk, the management puts in place a control. They say cash, 2 people have to have joint custody. That's a control that I put in. Control risk is a risk that this control will fail. So I have an inherent risk of 100. I put in very good controls. So my control risk is only 10. 90, I'm sure, I'm happy, I'm good. I have a great internal control foundation. I have a CEO, I have a board, I have great board oversight, I have monthly reporting, I have internal control checklists, I have a great internal auditor, I have a darn good statutory auditor. We have a QA process. All that are your internal controls that you build in. Statutory audit, of course, is an external control. Now, when both of these work together, you have a small component of control risk which is missing. If there's no control risk at all, then why would I even do an audit? I'm saying, okay, everything is fine. Now, there's a detection risk. What's a detection risk? It's a risk that an auditor might fail to detect a material misstatement. And that's actually the sword on your neck. You can't afford to present an opinion on a financial statement which is misstated. Like, for example, I came in today, I was given a financial statement of a company which is the year 2017. Now, this company has got struck off in 2017. Directors are disqualified. The strike-off came only in July 2017. This balance sheet has been signed in May 2017. Now, in May 2017, anyway, the directors have not filed financial statements for 3 years, which is pretty evident in the public website. How can I today in my audit report say that you got a written representation that none of the directors is disqualified? Small, very commonsensical things, which could be an issue. Anyway, this is an audit reporting itself where I came across this, but your detection risk is where you fail to detect. The client has no inventory, but he's reporting 12 crores of inventory. And honestly, every financial statement you say, okay, inventory is subject to certification by management. No, you're accountable for that component and you are expected as an auditor to make sure that you got it right. The COVID-19 and the general risks that I spoke about pretty much in the preamble to my presentation. So the management, so how do I check for risks? So on one axis, I have my risk, and on the other axis, I have my assertions. This is what the management tells you, that it exists, occurrence, that a transaction occurred, that what's recorded in the books is completely recorded. It's accurately recorded. My cutoffs exist. So I don't sell in April and record the sale in March. I sell before March, I dispatch before March. The risks and rewards of the sale have moved on to my buyer in March, and hence I deem it fit to account for the sale in March 2020. That's a cutoff control. Classification. Your Schedule 3 wants you to give it as current, non-current, investment disclosures, quoted, unquoted, diminution, goodwill on consolidation. All this is your classification. Existence. My assets and liabilities exist as at the balance sheet date. There's no unrecorded liability. Rights and obligations. We spoke about this. The company has the right to the asset. My company has an obligation attached to certain assets. My client has an obligation to discharge this liability. Valuation and allocation. Inventory components, for example, would be subject to valuation. So these are your assertions, which the management comes and says, okay, this is all there in my financial statement. What do you as an auditor do? You test those assertions. And then how do you test those assertions? You perform audit procedures. Again, there's a standard on auditing, on audit procedures, which basically says that there are 3 types of procedures: risk assessment procedures, compliance procedures, and substantive procedures. We all know risk assessment procedures are my entity level risk assessment. Is there a board? Is there a CFO? Is there a control foundation? Compliance procedures, those that are intended to test if the controls are operating effectively. You take 10 invoices and do a walkthrough, right up to the debtor balance outstanding. So you'll know the control. You'll be able to appreciate whether the controls are there. So sometimes I will invoice even without a sale order, and the money would have never received, which means nobody even asked for it. Similarly, I will dispatch, but my lorry references are not captured anywhere in my system. So I don't know whether the dispatch really happened. Substantive procedures is the core of your second part of your audit, which are tests of transactions and balances. I check 100 sales invoices to check for dispatch. That's a substantive procedure. Tests of transactions. This is an example. Tests of balances. I take my data balances. I test my data balances. I check whether my Excel total of my fixed asset register is equal to my tally. That's a substantive procedure. Analytical review procedures are also substantive procedures. I compare last year's purchase, this year's purchase, last year's creditor, this year's creditor, last year's assets, this year's assets. Now, and today you perform audit in the following manner. You first do analytical procedures. Then you perform compliance procedures, and then you perform substantive procedures. The more you get comfort that internal controls are good, the lesser substantive testing procedures you will perform as an auditor. So, and somewhere when you read these standards on auditing, they're actually incredibly delightful to read, and I discovered them very late in life myself. But it doesn't take very long, and they're very well scripted and written, and they give you a lot of they give you a lot of comfort, because a lot of us comply with 70% of it, because we operate in common sense zones, and the standards are all about common sense, but there's a 30% which is very unique and funny, which I will unravel for you as I speak about even SA 230, where I discovered some things. So why do you do all this? You do all this because you want to obtain audit evidence. So what are and that's one way of looking at procedures is from a standard definition: compliance, substantive, and risk assessment procedures. But based on the kind of audit tasks that you do, there's a different way of looking at audit procedures. Not going into too much detail. Analytical review, observation. I observe physical verification of inventories being done. I inquire. I call up somebody and check, are you holding shares in my company, to a shareholder? Or I call an investee company and say, look, am I a shareholder in your company? I call a supplier and say, did you supply to my client? That's an inquiry. Inspection. I inspect securities charged to the bank when I go for a bank audit. Confirmation. I obtain bank confirmations, data confirmation, creditor confirmation, loan confirmations, loans and advances confirmation. So all these are confirmation procedures. Reperformance. Your client says, okay, when I press this transaction code called MIGO, a GRN gets created in SAP. I tell the client, okay, come, sit in front of me and do MIGO. So my inventory code has 100 units of stock. When it passes the MIGO entry, it has gone up to 120. Okay, so reperformance. Recomputation. Most of our clients maintain fixed assets listing in Excel. They work out the depreciation offline. You tell them, just give me the Excel, you delete everything and you recompute the Excel. Bank interest computations are recomputed. They're recomputed actually. So this is another way of looking at audit procedures. So why do you do it? You do it to obtain audit evidence. And I've always said this before. It's a very thin coin. One side is negligence and one side is diligence. And the rim of that coin is your audit working paper, audit documentation, your compliance with SA 230. And in terms of audit evidence, the working papers say it all, because nobody is going to say, okay, no, I spoke to the client on that day and he told me this. Nobody takes those things on record. Written evidence is better than verbal evidence. Auditor obtained is better than client provided. External evidence is better than internal evidence. And documentation and the way you maintain your working papers acquire tremendous significance, because all audit evidence is persuasive rather than conclusive. And the second most important thing is you can't do 100% check. Having said that, if your client has no internal control, he's a sole proprietor doing something, then you better do a 100% audit. So because you know, it's not practically possible to do a 100% audit, which is why you rely on sampling and procedures that you follow. So with this, we come to the core part of my presentation, which is on the audit documentation itself. So this standard on auditing, and I thought what better way to do this than to actually walk you through the important elements of the standard and the way it's expressed. It deals with the auditor's responsibility to prepare audit documentation for the audit of financial statements. So you have an essay on going concern. Today, if you have examined that essay on going concern, you will have to document it here. There's an essay on sampling, say. There's an essay on communication with those charged with governance. There's an essay on audit evidence. Compliance with all these essays that form part of the essay framework has to get captured in your audit documentation. So evidence of an auditor's basis for a conclusion about the objectives of an audit. What's my objective of the audit? True and fair opinion. True and fair means what? True and fair means my asset is true and fair, my investment is true and fair, my inventories are true and fair, my debtors and receivables are true and fair, my cash is true and fair, my bank is true and fair, my loans and advances, my share capital, my secured borrowings, my unsecured borrowings, my reserves and surpluses, all these are true and fair and free from material misstatements, whether due to fraud and error. And so I believe my financial statements are true and fair with reference to compliance with my accounting framework, applicable reporting framework, as well as with absence of fraud and error. And I've also complied with the standards on auditing, and they are free from material misrepresentations. Evidence that the audit was planned and performed in accordance with the essays. See, as auditors, we go on talking about accounting standard compliance. For a moment, let's stop here. The accounting standard compliance is the client's problem because it's their responsibility to prepare and provide financial statements. It's essay compliance, which is largely your problem. Accountability, planning, performance, continuing matters, SQC1, and external inspections. Your audit document also is important for these. You could have somebody, a banker, who will call you and tell you, please tell me what you did in the audit 2 years back. So if there is an external inspection that's needed, then it's your documentation that will hold you in good stead. It helps you to fix staff accountability, because later on, as I will discuss with you, audit documentation also includes responsibility assignation documents. Who's doing what work? Who's going to sign on it? It helps you to plan the audit. Which component, for how long, right? And certain things might be important for the next year. My client might have taken an EPCG license on 25th March. So there's nothing to comply in terms of export obligation today. But next year onwards, the client compliance starts. So you will record continuing matters in your audit documentation. SQC1, which is your standard on quality control for any audit firm. So a document is a document for the present, the past period which you've audited, and the future. So now let's come to the second part. Now, at the end of this, I'm going to share with you an Excel file, which I've had the opportunity to present in EIRC earlier as well. And I will certainly show you for about 10 minutes on how that Excel template is actually structured. And when Vivek actually made this request to me, he also wanted me to, sort of present those templates in a very short manner so that, you can take it back. And we've already had one session in EIRC where I've demonstrated these templates, but they're fairly self-explanatory. Audit documentation is the record of audit procedures performed. Sorry. Audit evidence obtained and conclusions. So your working papers have to have three parts. What did you do? How did you do it? What did you obtain as evidence, and what is the conclusion? And this has to be for each component of the financial statements that you audit. Audit file. So very clearly, the standard on auditing permits you to hold it in physical or electronic form, containing the records that comprise the specific audit documentation for an engagement. Now, my own understanding of an audit file is you will have two kinds of files, permanent note file and the current note file. In my permanent note file, I'll have my articles of association, my memorandum of association, my list of directors, my old list of shareholders, etc. And in my current, and whatever I think is permanently to be noted about a client. And my current note file is what is my audit for the year 1920. And I also need to maintain component-wise working papers and Excel, which I will demonstrate to you at the end of this. Now, can I do all my documentation after the audit is over? No. The standard says timely basis helps to enhance the quality of audit and facilitates effective review. Because as you review it with your junior, if he has prepared the document, you have something to note on the document. And the document prepared after the audit work is likely to be less accurate than the documentation prepared at the time of such work. Very, very true. Because when you write something live as you're doing it, your approach to the way you document is so different from the way you document it later. Your exceptions are likely to be left out if you document later. The standard also speaks about what constitutes audit documentation. I have put engagement letter. The standard does not talk about engagement letter, but it's pretty much part of your audit documentation. Audit programs, analysis, issues memorandum, summary of significant matters, letters of confirmation that you've obtained from various people, letters of representation that you've received from the management, checklists, correspondence including email concerning significant matters, client data as obtained from the audit, abstract of entity records. See, this is very important board minutes. You extract it and you can put it as part of your working papers. So if client tells you, I can't give you this, I can't give you this, that, please dangle SA 230 in front of them and say, look, my own institute tells me that all this constitutes documentation. However, if your client feels something is highly confidential and he doesn't think your article assistant should see it, then you may put it in a separate file or you might take relevant safeguards, but you'd obviously want to respect what the client is saying. Now, the standard interestingly also says what need not constitute audit documentation. Superseded drafts of working papers and financial statements. So let's say I'm doing 8 runs before I come to the final trial balance. You don't have to keep each run. Not necessary. You might have a system where, see, I would like to do this. In my firm, I say anytime you recommend an audit entry, please keep a tracker. But in any case, those entries get passed only on 31st March. So there is no concern. But it's important for the client to understand that my audit has made an impact to you. So you don't need to keep all the versions of the trial balance, notes that reflect incomplete or preliminary thinking, previous copies of documents which are corrected, or other errors or duplicates of documents. And very interestingly, it also says oral explanations do not represent adequate support, but may be used to clarify or explain information contained in the audit documentation. So typically, if you're doing an audit documentation, then I think it's extremely important that if it's an important meeting where you're discussing something with a client, please minute it. Please minute it, send a copy to the client and keep a copy in your working papers. So the standard says what need not constitute audit documentation. Broadly, what are the objectives? Okay, we keep on saying audit documentation is nothing but a little bucket where you store all your audit evidence, but in very neatly categorized manner. Permanent note file, current note file, and within the current note file, various components of your financial statements. This documentation should be sufficient and appropriate for conclusions. I'm taking a particular conclusion saying all my debtors are recoverable. So your document must say why you believe it to be recoverable. It must say why you need to believe, why do you have you concluded that it is not believable and you've taken a provision. It provides evidence that the audit complies with the standards on auditing. It's neither necessary nor practical for the auditor to document every matter concerned. See, I think audit is all about materiality. What is materiality? Is again individual instances. Again, an audit itself, again, I go back to the definition. It talks about free from material misstatements, whether due to fraud or error, and a balance needs to be maintained. The audit documentation should ideally provide evidence of the auditor's exercise of professional skepticism in accordance with the standards on auditing. See, that's something that's currently running through. The current watchword is to be skeptical, which another way of explaining is you trust, but you verify. If your client says, I have 10 crores inventory, you have to be skeptical. Is it possible for my client's factory to hold 10 crores of inventory, which is 5,000 metric tons? That's skeptical thinking. Why should my client have 10 crores of inventory? What has he reported in my stock, in the stock and book debt statement to the bank? Is he reporting something else for stock and book debts and something else for financials? Why does he believe all this is recoverable? He's got a certain mold, but that car where the mold is stored at, let's say 2 crores in my balance sheet, but that car model itself, is it there or has it been discontinued? These are examples of skeptical thinking. You have to be skeptical today. Your client has given a loan in advance to somebody. Last 8 years, it's still pending as loans and advances. Why would anybody give a loans and advance to somebody and not want to collect it back for 8 years? You could be true and fair. That party also will say, I'm confirming. But you have to examine in the context of impairment to your own client. Whether it is right, I took money from the bank at 18% interest. I've given it to my group company for free, no interest. What's the group company doing with that money? Why would you do it? Why would anybody do it? And in all this, you have to respect that the client that you audit is a standalone entity. And standalone, I use the term here not in the context of your Ind-AS or consolidations or whatever. I'm talking about it's an individual artificial juridical person. And it has to be respected as such. So you might want to, so you need to establish, you need to, what do I say? You need to maintain the integrity, the integrity of that entity being a company. It could be his own another company, but that's not allowed. You can't give something free. Documentation of significant audit matters and professional judgment. That's the second thing that the standard talks about. It says you better document everything that gives rise to significant risks. Results of audit procedures that indicate that the financial statements could be materially misstated. You're going to give a qualification. You're going to do a disclaimer. Then please document those things even better. Or you need to revise your previous assessment of risk. Initially, when I started this engagement, I said, oh, everything is fine. But then I come and find that inventory is missing. Circumstances that cause the auditor to causing significant difficulty in applying audit procedures. Confirmation of balances. Let's take 80% of my recoverability, 80% of my advances have been given to a group company. Now, this group company is in my same address, same mail ID. But confirmation of balance is not coming. Why would a confirmation of balance not come? This is again a combination of being skeptical and inability to perform an audit procedure. Findings that could result in a modification to an audit opinion or inclusion of an EOM, an emphasis of matter paragraph in the auditor's report. So they are saying you document what you're doing, but document any exception more importantly. The basis of auditor's conclusion for subjective judgment. So accounting estimates, goodwill impairment, fixed assets impairment, your provisions for non-recoverability of debtors, provision for stock obsolescence, anywhere where there's a judgment involved, please make sure you document it clearly. You say 80% confirmation of balances have been received from all parties. Hence, I'm not considering any provision for recoverability. Now, there could be some circumstances where you challenge the very authenticity of a document. Client gives you an invoice from a supplier. You find that you perform some additional procedures to ensure, or the client gives you an agreement. And he says, no, this loan was entered 3 years back, but I forgot to record it in the books. I got cash for this loan. Things like that, when you're trying to do more work to establish the authenticity of a document, or you're using an expert, or you're doing a confirmation procedure, the standard says, please, document it better. And especially if you think there is. So the other element that we spoke about is, one is judgment. Two is any circumstance where you've done a little more work in establishing the genuineness or authenticity of the transaction, or concluded it's not a fraud or a fraud, then you document those things in greater detail. The auditor's determination of CAM, suppose CAM is applicable, then all such CAMs you must compulsorily record very, very neatly in your audit documentation. Now, the standard also talks about an audit completion memorandum, which I think is a great idea. So at the end of the audit as a partner, and this is something I would do, I will go to every component of my working paper. I will start with fixed assets. And I've seen my own partner where I did my articles, one Mr. Shankar Datta, who was an amazing professional. I've seen him write the top notes himself. He would actually write down, in a very neat hand, he'll look at fixed assets and what he thinks is very important this year for signing and what needs to be taken next year would be documented. And that's an audit completion memorandum. And very interestingly, I have a personal reference here. For some strange reason, when I did my articles in PW Calcutta, I was registered in the Eastern region. So I wrote, and when I ranked, I got an award for the best lady candidate from the Eastern region, which is a pure, chance event. And I was registered under a partner in Kolkata. And very interestingly, my spouse was also registered under him. So just a nice link I have to the EIRC. And I keep scaring my council members that if I contest, I will contest from EIRC next time. So audit completion memorandum. The auditor may consider it helpful to prepare an audit completion memorandum. So you go through every element and, you sort of record what is the most important matter for this year's conclusion in assuring yourself it's true and fair, as well as what you think is important for the future, for the next year's audit. And this audit completion memorandum will be very beautifully cross-referenced. So when I'm writing my conclusion memorandum for fixed assets, I will cross-number it to fixed assets, page number 18. This point of EPCG is there. So must look for it next year. So next year when you do the audit, because you have a cross-referenced work paper, you'll be able to, it facilitates your next year's work. Now, the other interesting thing is for your own review, if somebody wants to come and do a peer review, it becomes easier for you to show it to them. The preparation of a summary also assists the auditor's consideration of the significant matters. It may also help the auditor to consider whether so for example, essay on going concern. Another very important thing this year is your standards on auditing on going concern. I think it's very important. Whether you've done your essay compliance on going concern and if there are any risks on going concern, whether they have been appropriately dealt with. And I think that audit documentation part will be a good, component this year in your working papers. Sheer reason being your current environmental and economic complexities and the downturn in the economy. The other matters. So what did they say? You have to record an audit completion memorandum, significant audit matters where you needed to make a professional judgment. So these are important things. In addition to this, you have other matters. Minutes of meetings. So you did your audit, you went and told them, see, you have to pass so many entries, so many issues are there. Those minutes of meetings become important. How inconsistencies have been addressed. I've on one hand said my data are collectible, but my confirmations are all coming in the reverse direction. How have I handled it? I've decided to take a provision. Or I'm not getting any confirmation of balances. I'm not able to trace certain debtors of the company. I'm not able to trace creditors of the company. Considerations. Now, very interestingly, the standard on auditing also says, look, do you have to do all this audit completion memorandum, component-wise working papers, checklists, audit programs for everybody? No. Just as everything else, your audit documentation needs to be commensurate with the scale and size of the entity. In fact, the standard says if it's a very small entity, you maintain one integrated 100 paper. Let's say 100 is my number. You maintain one integrated bunch which will convey the whole story to you. But do cap it with an audit completion memorandum. And typically, how will you organize your working papers? First, I will have my audit report. 2, I will have my financial statements. 3, I will have component-wise working papers. And in my component-wise working papers, I will have separate working papers for fixed assets, investments, inventories, revenues and receivables. We combine it. Cash and bank, loans and advances. That's your assets. Liabilities, share capital, reserves and surplus, secured loans, unsecured loans, current liabilities, and your provision for taxation. Contingent liabilities will be a separate audit working paper. You will have a separate working paper for ECO for compliance. You will have a separate working paper for CARO compliance, CARO checklist. You may have a separate working paper for standards on auditing and accounting standards, or you may embed those checklists within your working papers for the respective components. But typically, this is what is your integrated documentation. And if your client is even slightly large or a public interest entity, please maintain all this. For example, in your client, investments may not be there. So you just score it off. That's it. It's not there. And this is exactly what I intend showing to you in the next 10 minutes. Now, assembly. It also talks about assembling the final audit file. So before I go into this final audit file, let me just show you one example of an Excel checklist, which I'm going to share at the end of this presentation. So this is the index. I'm not going into the documents. Acceptance checklist, if it's a first-time audit. Continuance checklist. Engagement documentation, which is your certificate under 141. NOC from the retiring auditor. Engagement letters. See, the institute has given a very clear engagement letter format. You just have to click whether ICFR is applicable or not applicable. Checklist for understanding the client business. Audit planning memorandum. Component-wise audit plan. So for each component, I've given you an audit plan. Just as I described, fixed assets, investment, inventories, revenues, cash, bank, loans and advances. Share capital, reserves, secured, unsecured loans, current liabilities, provision for taxation. And of course, your P&L will be a separate working paper bunch. So in your working paper bunch, and let me take some example here. Fixed assets, this is the audit program. It tells you overall procedures, additions, deletions, personal and revenue expenses, specific aspects relating to capitalization, physical verification, idle unutilized assets, control over asset movements, depreciation accuracy, fixed asset register maintenance, revaluation, title and insurance in special categories of assets, deferred taxation becomes very important, and review of your capital work in progress. So this way I have presented all my checklists for you, and they are absolutely self-explanatory. So you have your assertions. You can mark your assertions. These are the audit procedures. These are your exceptions. So you can have additional sheets where you just document and close it. So this is a very brief Excel template I will leave with you, which might be of some help to you. So you then compile the entire audit file. SQC1 requires firms to establish policies and procedures for timely completion of the assembly of audit files also. The recommended timeline is 60 days, not later than 60 days after the auditor's report. Now, typically you will delete and discard superseded documentation, take it out, sorting, collating, and cross-referencing the working papers. So for example, in fixed assets, I'm looking at deferred taxation. In my tax working also, I will refer to my fixed assets. So suppose I have a huge leasehold improvement, which for Companies Act, I'm depreciating over the primary lease, which for Companies Act purposes, I'm treating differently. But for income tax, I'm writing it off within 3 years, which is my primary lease period. So those examples could serve for cross-referencing. Signing off on completion checklists, documenting audit evidence that he has obtained, discussed, and agreed. So if you go here under each of these sheets, I may not have covered it, but it should say done by and reviewed by. Every single checklist here has to be signed off. Prepared by so-and-so, reviewed by so-and-so. So kindly just copy this across everything, and you can of course delete this part when you're using these checklists. So this is what the standard talks about in terms of your final audit file. And admittedly, you can maintain it in hard copy or in soft copy. So that's completely your choice. Retention of engagement documentation. Very interestingly, I had missed reading this until today. SQC1 again requires firms to establish policies and procedures for retention. The retention period is no shorter than 7 years from the date of auditor's report, or if later, the date of the group auditor's report. But however, if there is any proceeding which is pending, including any DC references, etc., please store your working papers for a longer period. Ownership of engagement documentation. Very oft repeated question. The ICAI standards provide that unless otherwise specified by law or regulation, audit documentation is the property of the auditor. He or she may at discretion make portions of or extracts from audit documentation available to the clients, provided such disclosure does not undermine the validity of the work performed, or in case of assurance engagements or the independence of the auditor. In fact, the place where I did my articles PW, we were very good in documentation. Sometimes the client would call and say, can you give me that part? I forgot, we don't know where we left it. So we would extract and send it to them and say, this is the working. So you can share extracts where needed. So why do these checklists and programs help you? Helps you to do an efficient audit. Efficient because, see, your fee is limited. It's not endless. So you'll have to do it in the quickest possible time. Effective audit. It means I will be able to make my audit, draw my audit conclusion on true and fair in the most effective by using the most minimal time as possible. Effective with due regard to materiality and risk. Complex requirement. Today it's extremely complex. Everything is changing every day. Just one GST is so big today in terms of its compliances, tax audits, etc. And various laws and regulations coming in, complex accounting systems and the ERPs. Everything has made our life more difficult. It helps you to standardize work. See, because today if you look at the fixed asset checklist that I'm giving to you, 70% will be applicable to everybody. 30% of this checklist may not be applicable to somebody. There will be another 30% which is very unique. Your client might have some special scheme for fixed assets, let's say EPCG, or there could be some, in inventories, there could be some advanced licensing, something, imports. Those extras, you will find it very easy to fit in. Delegate work, and no man or woman does it all, right? So we obviously rely on our assistants to do work. And today and I also think in some sense, for a profession which is very strongly founded on this articles concept, I think each one of us as a principal has an obligation towards our article assistants to teach them and to teach them what is a best practice. So in this act of doing these checklists, I find that the kids are extremely excited. They like to fill up these things. And you give some of these checklists to one of your assistants, they will put it in a workflow and give it back to you for the next year. So it helps you to, sort of train formally. With us, maybe we had the advantage of principals being closer to us and, lesser number of engagements. But now we might be handling a lot more. We have a lot more articles. So it makes for some amount of structured training and cumulative audit knowledge. So today when I go do an audit, I first see my last year's working papers. And it's so nice because you just quickly pick up what needs to be picked up and start running for the next year. And the end state is it helps you to obtain sufficient and appropriate audit evidence. So how would you prepare your checklist for documentation? Client acceptance, continuance, and audit planning is one category where you're not yet going into the financial statements fully. You've just done some analytical review procedures and decided, oh, there's a huge capitalization this year, so my assistant has to spend 10 days on fixed assets. They help you to draw how to do your audit and what you've accepted. The next is the core checklists: assets, liabilities, contingent liabilities, income and expense audit programs. In my checklist, both these are covered. I've not given you the special purpose checklists, which are your SA checklist, AS, going concern, Schedule 3, Companies Act, GST, tax audit checklists, etc. They are outside of this purview of what I have prepared at least. So implementing these might just be a good idea. And if you notice in my checklist, it's linked to assertions. So you know why you're doing a particular procedure. You're doing a particular procedure because the management told you the asset exists. So you've checked out the physical verification reports. So you know the asset exists. It's modular. It's modular in two senses. Some components may not be applicable. Some newer components may be there, which I have not considered here, something very special to your client, a Forex transaction checklist, for example. Similarly, you can build on these audit programs and relevant reviews and sign-offs. You know, everywhere it is documented. See, and everywhere you have this concept of the signing partner, a review partner who might want to review the work that you've done. You have a manager who's a chartered accountant who's performed this work. It also is very important because it imparts a certain sense of responsibility. Today, when you tell the article assistant, okay, have you finished it? He or she says, yes, yes. You say, can you please sign on this checklist? The kind of attention to detail one comes up with is a lot higher. And it's true of me also. When I sign something, I certainly cognize for it more than I would do when I was just making a statement or writing some note. So I've shown you the Excel file. With this, I am concluding the first part of my presentation, which just in terms of a recap, we spoke about audit, we spoke about true and fair, we spoke about risks, we spoke about assertions, we spoke about audit procedures to verify those assertions. We spoke about different types of audit procedures. We spoke about audit evidence to draw a conclusion. We spoke about how audit evidence would be put into audit documentation, which is, it's nothing but a host of your audit evidence. And we spoke about audit documentation, exactly what SA 230 talks about in terms of audit documentation, including aspects such as who's owning the working paper, what is the retention period, what is the objective of audit documentation, what all constitutes audit documentation, what does not constitute audit documentation, what is a closure or a completion memorandum in the context of audit documentation. So these are some of the, and then what are the most important things? All estimates, all judgments, all exceptions, all your checklists, etc. All these form part of audit documentation. And then I demonstrated to you a simple checklist we had used in our firm and I thought fit to share with the larger fraternity. You can build your own checklists as well. So with this, I sort of close the first part of my presentation. The second part that I was asked to speak on, and in this part one, I've also covered for you your COVID-related issues. Of course, the Institute has come up with a guidance on this COVID matter. And my only request to you is please take that very seriously. I'll also share it's called the Joint Initiative of the Accounting Standards Board and the Auditing Standards Board. It's ICAI Accounting and Auditing Advisory, Impact of Coronavirus on Financial Reporting and Auditors' Consideration. So the contents are in two parts: impact of coronavirus on financial reporting and impact of coronavirus on audit of financial statements. And it goes on to describe, it's a very, very extremely well-written document, about 49 pages. Go through this very quickly and highlight the most important parts. So it might be helpful. It also talks about aspects such as risk of fraud. Now we come to the second part, which is actually the statutory audits of companies, the matters of emphasis for 2020. So again, this is a much larger subject, very difficult to compress within a very short span. But I've sort of put down some matters which are very important for you. Your qualifications and disqualifications are paramount. You must ensure that you don't suffer from any disqualification in being appointed as an auditor. Second, if it's those categories of companies which are coming under rotation, make sure that your term is not expired. Third, very important, Section 144, restricted services. As an auditor, you cannot perform proscribed services. And in proscribed services, there is a very interesting term. It's called management services, which is as yet undefined. But the most important thing is, as an auditor, you must not have self-interest threat, self-review threat, advocacy threat, or intimidation threats from your client. These threats can cause loss of independence in an audit engagement. I will only give you an example of a self-review threat here. Why do you not do the tally accounting for your client? Because you are doing work and you are going to review your own work. That's it. Should do presentation, you've given a separate report, that's fine. Because that's an audit by itself. There's no self-review threat. Am I audible? The next is engagement letter and the retiring auditor. You need to have an engagement letter, which you have to prepare in the format which is recommended by ICAI. There are two formats of engagement letters. One for your aspect relating to where ICFR is applicable, where ICFR is not applicable. In fact, that itself is very important in the context of a company. Please understand whether ECOFR is applicable or not applicable, CARO is applicable or not applicable. Please read the relevant master document. Do not rely on PowerPoint presentations put out because somebody might have just modified it. Internal audit, whether it is applicable to your entity under Section 138, KMP applicability. If it's greater than 10 crores paid up share capital, then all your KMPs become applicable for a public company. CARO applicability. Check whether CARO is applicable. I've seen certain financial statements where CARO is applicable but was missed out by the auditor. See whether ICFR was applicable. Maintain separate working papers. Financial year, I think most of us know it. It's the same financial year. You have to use only April to March unless you have a very specific exemption which has been granted. Small company provisions, cash flow statements, etc. Please understand what a small company is. Private limited company exemptions. There are certain exemption notifications which have been issued. I think one in 2017 and one in 15. Please read it and ensure that your client has broadly complied with everything. Again, see, compliance with laws and regulation is a standard on auditing. How much can you do? You have to be clear that there are no material non-compliances on the Companies Act. Cash flow statements need to be prepared, okay, except where the exclusions are specified in the Companies Act. Share application money has to be allotted within the specified period of time. Otherwise, it becomes a deposit. Encourage your client, to refund the amount if they have not been allotted. Depreciation, kindly take care. A lot of people have still not moved into 2013 depreciation. Please ensure you move into the 2013 depreciation model. Deferred taxation, kindly take care that your timing differences are properly cognized for in preparation of your financial statements. And deferred tax is what you use to do to ensure that your tax liability is correctly stated. The effective tax rate is correctly presented in terms of your provision plus or minus your deferred tax asset or your liability. Loans from members, loans from directors relatives, loan to directors, Section 185 compliance needs to be ensured. It's substantially diluted now, but you still can't give a loan to a director or a relative or an entity in which he's interested unless, there is a special resolution provision. But loan to a director is a no-no today. Trade advances received to be utilized or adjusted within 365 days. You can't keep it endlessly. And another thing, as an auditor, please don't suggest anything. That's the most important thing. Don't give them an option saying, no, this year we'll reclassify, we'll take it differently next year. If it's a yes, it's a yes. If it's a no, it's a no. Tell them my opinion is this is wrong. This becomes a deposit. I have to disclose it as a deposit and your 73 non-compliances apply. Now you do what you want to do. That's it. Deposit-related provisions have to be taken care of, the acceptance of deposit rules. Auditor's report format, kindly ensure that you use the relevant essays, 700 series formats. Obtain a management representation letter from the client. Again, this is agnostic, whether it is a company or a partnership, it's the same thing. Going concern IBC process. See, also ensure, do a little bit of public domain search on your company. Ensure that the client whom you're signing off has not been struck off. It's not part of the 6 lakh companies. A lot of times the directors themselves will not know it. Please be careful. I find this lack of awareness stunning in the market. People think company is like, it's a company as in 2 or 3 people. They have to respect that there is an act by which they have to abide. SAS Schedule 3 compliances become very, very relevant. I have seen entities where the names of the investments are not even disclosed. And I'm talking about very recent financial statements. No, you have to disclose. Take due cognizance of the relevant Companies Act notifications, etc. I'm afraid may not have too much time for questions. Now we come to the next part of it, which is physical verification. See, inventories is a component of the balance sheet, and I am just going to ping my colleague because I've requested him to do part of this session. I would just like to check whether he has come in. Yeah, he's come in.
Ma'am, what's his login name? Aditya AM?
Yes.
I'll just make him a co-host. He can then share his screen.
Sure. Aditya, are you there? Okay. So,
yes, hi, I'm there.
Yeah, okay. So when we speak about inventories, it's one component of the balance sheet that actually comes from outside in terms of its valuation, which is why you have verification, you have valuation, you have presentation and disclosure. All these 3 are very important. So in the context of physical verification, there have been huge challenges, not only during COVID, even pre-COVID. And I'm sure this is going to continue for some time now with our inability to travel, etc. So one of our clients wanted us to do it. He says, you can't travel, but please tell me, you have to still certify my financial statements. How can I help you? And this was at a time when we could not send an associate either. And this was slightly remote. And let me, for an example, assume it's a retail entity. Let's say it was a shop which had about 10,000 items of inventory. And they were keen that, and we were not the only auditors. There were multiple auditors and all of us had to certify. So we said, okay, can we use technology and build a small tool by which I can verify? And then I sit in the back end in Chennai, sitting and controlling and seeing whether my books and physical are matching. And it's done with proper lat long, controls to ensure that my client is counting only in his office. And we also ensure that no item of our inventory gets recounted again. We built in some basic controls and this was a huge success. In fact, they referred us to somebody else and we've now started doing this, even cases where it is not our statutory audit, but somebody wants us to do only the verification. And it's in this context that I'd also like to encourage a lot of us to do things like this, because for me, it was a completely new experience and I have the benefit of younger partners who are constantly, very aligned to technology, which I'm slightly redundant on. Beyond my MS Excel, I really can't think much. But I think it's very nice because for us, it meant, and personally speaking, a movement from being a services organization to a product organization. It's a very small start, but I've hugely encouraged my team to do more R&D and do this. So I'd like to introduce to you my colleague and partner, Aditya, who actually has done this hands-on. So I thought it will be a lot more exciting for him to present this himself. And when Vivek suggested it, I thought this is a good idea. But unfortunately, and apologies to Aditya, I forgot to put his name in here. And with these few words, I'd like to conclude my session, and it's over to Aditya. And he broadly talk about how we can all absorb technology. And as a profession, we seem to have a huge tech debt. We need to get a lot more upgraded. So it's over to Aditya. Aditya is a chartered accountant, and he's in his mid-30s and handles a lot of work on the risk advisory and the IT advisory space. So it's over to Aditya. And again, I've not really shared a profile of his yet. So that's about it. Thanks, Aditya.
Thank you, ma'am. I'm going to quickly, sorry, can I? Yeah. So I'm going to quickly share my screen. So thank you so much, ma'am, for that kind introduction. So quickly, what has happened over the last 6 months is that there has been a lot of challenges in terms of reaching the place of work, which has also led to a lot of opportunities. So there has been various areas where we've been able to sort of look at automation. And one advantage of being a chartered accountancy firm is that we are already rendering that service. So it's a backward integration, meaning that we went bottom up, which means that we had to sort of re-engineer the process and use the advantage of technology to sort of deliver a product which would achieve two things. One is efficiencies of scale, which includes time. The second part of it is better audit evidences, in the sense that aspects like audit logs, timestamps, which are far more reliable and fact oriented rather than subjective opinions. The third part of it is definitely the safety and the security that needs to be sort of considered in these times. So basis that we've been able to achieve a lot of efficiencies through automation in various areas. I would like to specifically talk about physical verification, but before I go into that, I would probably say that these are areas where people can look at analytics and insights. You can look at simple MIS dashboards which can be presented to management and provide key performance matrices which are immediately available for decision making. Hospitals are on hospital management systems which can be helped with very specific MIS tools which will probably give you better insights, visitor management system, so on and so forth. But without waiting further, I will quickly talk about the digital verification tool that we have sort of enabled for few clients of us. So what happens today is there are three types of verifications that happen. One type of verification is where there are no barcodes, there are no methodologies where you can actually capture that specific unique category of that item. The second type is the barcoded ones. Classic examples being your retail outlets, your supermarkets, so on and so forth. The third category is natural resources, which are anyway beyond the purview of what we're trying to achieve. So this very specific efficiency is something that we achieved where there was a specific barcode that was available on the item that we were trying to verify, right? So now this verification can be done for your inventories as well as your fixed assets. It doesn't matter as long as there is a barcode that there is, or if there is a system that can be put in place for the barcodes, this will work seamlessly. So what do we try to achieve here? So we identify a very specific item and we assign a specific barcode to that item. That barcode can be sort of provided by us based on a certain logic, or those barcodes can already exist as part of the ecosystem of the company. Examples: if you're an apparel company having a shop, then there is a barcode on your shirt or your shoe that you largely look to buy. If you're looking at, say, doing a verification of assets, classic cases being your laptops, they again come with barcodes. Again, this could fly immediately. And if there are some inventories which are not barcoded, again, you can define your own logic and affix that barcode when you're doing the verification. So what are the key features, or the problem statements we sort of try to achieve or try to address during this process? So we wanted to have a very unique barcode system, which means that there is a barcode generator. You wanted assets to be mapped and tagged. There has to be a scanning engine to enable this. In some cases, you wanted OCR or also image capturing, because there aren't barcodes and there are just pictures and images from which information had to be picked up. So you need an optical scanning reader. Then you wanted to ensure that you don't tag something twice. So you wanted duplicate detection that need to be done, basically your dedupe checks. You wanted your automated barcode validations that need to be done. As in, today you have a closing stock report. So if there are some items which are getting tagged, you wanted to know whether they're part of the closing stock or are they excesses. And the another specific one is they wanted to know where exactly is this item of inventory. Can you tell me in which bin or in which rack that a particular item of inventory is sitting? So that's again something that we could see. The next one is this being March, when this lockdown came in, statutory auditors usually use this time to conduct physical verifications and also get assertions about the levels of inventory that is there. So they couldn't travel. So they wanted to look at how this inventory verification was happening. So what we enabled was a live streaming mechanism wherein a statutory auditor can sit at his home and look at the actual inventory verification process that's happening. Then once the entire inventory verification was done, there was an automatic reconciliation process which happened, which means that the system throws out an output which will basically be the primary point of recon, and there is very few that you need to do after that activity is done. Then we did some intelligent insights and reporting. Examples would be, in this case, our case study is in the retail sector. So we were able to say, since it was a very unique barcode system which the company already had, we were able to say how long a particular shirt piece is sitting in your inventory. I could have manufactured this 4 months back, but this has not gone out of your system. So this was a very key insight for them. And this being a non-perishable product, what are the types of inventories that are not moving is something that you can pick up out of a verification exercise. And obviously, like I highlighted, your audit trails are much better. It's more fact-oriented, and the evidences are more objective. So these are all the key features that we sort of enabled during this process. So very quickly, I would probably explain how a very brief flow of how this was enabled. So this required a sort of a one-time setup. During this one-time setup, what do we achieve? We achieve 3 things. One is I have a mechanism for understanding the unique barcode which I need to assign. I will also understand how I have to map and tag the barcodes to the items. And obviously, I have to upload the closing stock into my application. So once this is done, you're good to go. So the guy who's on the ground, which is basically the store employees, they just have to take the entire, open this application in their phone and take it across the barcodes in the store outlet that is there. So what happens is that this application, when it sees a barcode, it automatically recognizes the barcode and it captures the image of the barcode, and it also timestamps it, which means that the video that is being taken as part of the application ensures that the physical verification is happening parallelly, and the exercise for the executive on the ground is largely to capture the video through the application. So that happens. When this product image and the barcode and the timestamp is captured, it goes back to the closing stock report, which has been uploaded into the system, and it sort of understands whether this is an existing inventory or is it an excess inventory, whatever it is. It will also perform certain dedupe checks. And for the guy on the ground who's basically doing the verification, there are notifications that get passed. So once that verification is done or the barcode is picked up, there's a notification that is pushed to the user saying that, look, this is done. You have to move on to the next one. So on and so forth. The count is gradually carried out. And once this entire exercise is done, what happens is there is a summary of verification report which is taken out, which will basically tell you what are my matched inventory, what is my excess, and what is my shortage. This is automatically thrown out. And then my exception reports are generated. This is again something that has to be tailored to each of your clients. Now, an automated email notification or a workflow happens wherein this report is pushed to the appropriate authority within the organization. So which means that once the verification is done, there is an approval process which happens through the workflow. You don't have this process of taking printouts, sitting and agreeing with clients, signing off papers, so on and so forth. Nothing of it is going to be physical. Everything is on the application. So the other thing, like I said, all these activities are time-stamped, which means that all your evidences are like pretty much like your digital signatures that are there for each of the users who are operating the system. So once that confirmation is received through the workflow, this engagement is basically done. So without generating any physical records and without actually visiting the location, we can easily complete the entire physical verification exercise on the ground. So what are my key benefits out of this is something that I would like to quickly highlight. Confirmation of an existence of the assets or the inventory is done without going there, which means that at the comfort of your home, you'll be able to see it. Automated configurable workflows based on barcode, OCR, and duplicate barcodes are all established, which means that all the approvals are happening on the workflow. And location-specific reconciliation is something which is very, very important because it reduces your time for reconciliation, which means that I'll be able to tell you in this rack, you have 3 shirts which are short, which means I don't have to go and look at the entire store to basically redo and find out where this application is or where that inventory is. Similarly, what it also does is it gives me live dashboards, which means if an audit supervisor from the organization is sitting and looking at the dashboard, it will tell you at any point of time, hey, look, there are 100 racks in this shop, 50 are completed, and 20 are in progress, and 30 is yet to start. Which means he can always push and say, look, you need to do it a little bit faster. All the escalations which usually happen on the phone, which happens on emails, are all done through the application. And then you have the ability to customize the barcodes based on your entity process. This is again very, very important because the logic for a particular barcode is very, very company specific. So there are certain schemas that are followed. So irrespective of what schema you follow, that can be onboarded into the application. And ability to handle multiple barcode types, which means that some organizations can use 2D barcodes, some organizations use 3D barcodes. So whether you use 2D or 3D, this thing picks it up. Now, from the reporting perspective, my auto classification and validation of barcodes, like valid, invalid, and duplicate barcodes. So another thing is, it could also happen that you have to imagine a situation where the barcode generated by the company itself is wrong. So whatever barcodes don't stand to the schema of the definition that the company has put in place, those are highlighted. Those are again sent back and rectified because they have far more, far-reaching importance pertaining to compliances, as in they are supposed to stick to that schema of the barcode, especially if it's in the pharma industry, right? Real-time analytics on the progress of the verification, like I said, is provided, and generation of automated reconciliation statements, which means this entire process, is completely offline, and they can also, and it's also cost-effective in a large way because the organization is going to leverage on the existing employees rather than having 3 or 4 people come pay for their travel, food, so on and so forth. So I'm going to quickly stop here and sort of conclude on the digital verification process that we have sort of enabled for a few of our clients. And if there are any questions that I can take, you can put that out in the chat box, and I'll be happy to answer. And I'll probably pause for a minute here.
Friends, if you have any question, you can write down in the chat box. No, nothing as such in this digital verification one.
Yeah, there are, I'm just going through the questions now. It's almost like our WhatsApp, everybody says hi. So, yeah, sorry. Can I, Aditya, can you stop sharing? I'm not able to see the chat window.
Yeah.
Yeah, just stay there. There is a question in COVID scenario, how do we go about inventory verification as many places are not accessible? How to address the risk of existence for March 20 or even to 2020 group audit as many companies are not allowing? So you'll have to see, I'm told the larger automobile companies have cracked this. I don't know what is the nature of business of the client, but I don't know, I am not able to understand how you would be able to sign off without doing an inventory verification. So there will have to be some amount of verification. Otherwise, how large a disclaimer will you take?
This is an example of what you can do. What we showed through technology is something that you can probably adopt and see if that satisfies the assertions that you need to put in place.
See, what Aditya is also trying to say is, if your client has barcoded inventory, then it's possible to verify remote by their own team, and you as an auditor can sit in your office and he goes around doing it, and you'll be able to track it. But if it's non-barcoded inventory or natural materials, like you have to do coal and things like that, it might not be possible. But you can arrive at some kind of a via media. But you'll have to see how to do it. But it will largely depend on the inventory type. How to check the authenticity of scan copy of vouchers shared by the client? You can't check the authenticity, but you'll have to believe it's true. You'll have to perform other audit procedures. See, for example, I have a large amount of debtors. The client has provided you with scanned copies of invoices and dispatch documents. Great. You'll have to do stronger external confirmation procedures to build better quality evidence for your true and fair. Electronic external confirmations, what type of additional documentation to be carried out? See, today also the banker doesn't say he cannot send you a signed confirmation. He will send you a signed confirmation. See, and today a lot of the questions that you're asking might have been very relevant for April, May, June. But now I think there has been a substantial relaxation of lockdown. And if your client is operating a factory, then I'm sure the banker is working and they'd be prepared to sign and send.
But Satya ma'am, just to add over there, many bankers has given digitally signed statements also, confirmations also.
Yeah, and if it is coming directly to you from the banker.
And, yeah, that is what is required. The positive confirmation of the external confirmation is required.
Correct. And if it's coming directly to you from the banker, it's well and good. See, I can give you an additional tip. See, all financial creditors, especially if your client has taken a loan, are required to report their loans in the information utility today. And that's under the insolvency code. So there is something called NESL. That's the name of the company, which is the designated information utility, which has been set up under the code. So those cases, you might want to also go and have a look at the utility itself. It might give you a lot of evidence on the entire borrowing component of your financial statements of your client.
I think there is one question on can this application work in large steel pipes manufacturing facility where large quantity of raw material, WIP and finished goods are there? So to answer that question, sir, there are two ways.
Can you repeat the question, Aditya? Go a bit slowly.
Yeah. So can this application work in large steel pipes manufacturing facility where a large quantity of raw material, WIP and finished goods exist? So to answer your question there, sir, is that if there is a mechanism where on your finished goods there are already barcodes, which I assume being a steel unit, barcodes will be there. Then on FG, certainly yes. On raw materials, again, you have to have a mechanism where you have to affix barcodes. But again, it depends. If it's cement, sand, something like that, again, it may not really be helpful. WIP, definitely not. But FG is something, you can always look at because that's something that can be enabled.
And to just add, you can at least break the problem. Suppose you have 100 crores of inventory and 40 crores is FG. At least you'll get comfort that 40 crores you've been able to verify.
Right.
The remaining 60 will have to see alternate procedures.
Right.
This might be a question that's right down Aditya's alley. What additional procedures to be carried out and documented for ITGC, which is IT General Control Testing during COVID?
So it's not going to be very different because what's going to happen is majority of the checks that you perform are all evidences which directly come from your IT infrastructure. There are again, ITGC is a lot of things. There are various heads and modules within ITGC. one important thing that you may have to look at is you have to figure out which of the parts of ITGC which are relevant at this point of time and which are not. For example, application development, system development is something that may not be relevant to a particular organization. So the first thing again is for you is to figure out which of the modules of ITGC are relevant to you. But the evidence collection process is not going to be very different or going to be impacted by COVID generally. Because most of the things are all, again, evidences which are collected through the system. And most of the evidences are, again, fact-oriented in the sense that they are timestamps, they are audit logs, and they are rules or settings within your firewall or an antivirus application. So these are all very, very specific, rigid, objective, fact-based evidences that are getting collected. So that there isn't really a difference, in my opinion, that because of COVID, it's going to change. But what would be also interesting is there is a global guideline that is in the work for digital signatures and e-signatures, wherein it talks about how evidences are collected and generally about the process for digital signatures as such. That would be a good read, probably, if you're looking at further explanations.
What is the consequence of not maintaining or inadequate working papers? I think you have a serious consequence. See, that's what I said. If everything is hunky-dory and there is nothing, nobody is asking for it, it's fine. But if something goes wrong, how will you prove that your opinion had a certain basis? I would. It's if somebody says what will happen if I don't comply with the Companies Act, you just have to say try not complying. So and if you look at even the disciplinary processes of which I have very limited knowledge or access to, but I know this, a lot of cases the indictments happen because people are not able to prove things. But let me also tell you there's a flip side. Before this IBC came, somebody would become an NPA, there would be a suit filed account, it goes for 8-9 years. But today, since it's a default-driven legislation, cases are getting picked up very quickly. And everybody is looking at the quality of financial statements and reporting, and a lot of auditors are being asked questions on how they've certified certain parts of the balance sheet. Is the PPT available?
Yes, ma'am, I have one small question.
Yeah.
Many people are giving this report under SS 700 that they have complied with standards on audit, and actually they are not able to show papers or documentation. Will it be a willful default under Section 447 of Companies Act? Because I am saying something, but I don't have. So whether it can be a question whether it's a willful default or not.
See, this Companies Act also has class action suits on auditors, etc. Those are all untested waters currently, but I don't know how long it's going to be untested. See, the thing is, tomorrow there are three things. There is diligence, there is negligence, and there is party to fraud. So the only thing that can help you to say that, look, I was diligent, I was not negligent, and most certainly not party to a collusive act along with the management, it's only the working paper. See, what Vivek is speaking about is the implication of this whole thing, which kind of gets very scary because today there's nothing that stops somebody from filing a criminal case against an auditor. So you only have to ask me what to do. I mean, if you ask me a question like, what happens if I don't do it?
The question over here, I was saying, when I am giving in an audit report that I have complied with all the standards on audit, which is required under Section 143, but still we are not able to prove that we have complied with the standards because we don't have a documentation to prove that, whether it will be a willful default because I'm saying something but I have not done.
No, I don't think that will come under 447 because 447 is well defined in the Companies Act. It's a fraud committed on the company by employees or officers of the company. So I don't think you can't at best. See, at best, even if you look at what NAFRA has done, they've said they've taken out the working papers and said you have not complied with this standard, you have not complied with this. That is where they were able to show that we have complied with SA itself.
Correct.
Now, if you say I don't have any paper to show compliance with SA, but frankly, SA compliance is not such a big thing. That's what I'm trying to say. As you do your component working papers, if you comply, you comply. That's about it. Direct confirmation from banker should be obtained by auditor as per SA. Whether bank will give direct confirmation or we have to process otherwise. See, all confirmations should ideally be obtained directly. There is no question of a confirmation coming through a client. So you are supposed to take the list of all debtor addresses, all creditor addresses, all bank addresses, all parties who are loans, all investee companies, take the name, the mail ID, the phone number, and the mailing address. In fact, the times when emails did not exist, I remember the auditor used to go to the post office or the courier and hand it over personally and make sure that the client was not getting involved. Independent confirmations and external confirmations have to be maintained as such.
And we should try to get maximum positive confirmations.
Correct, correct. And can we have a soft copy of the presentation? At the end of this, I will share with you my PowerPoint as well as my Excel file, which I have worked on. And I don't think there are any more questions. So I'm quite happy to sign off if we can close.
Okay, ma'am. Thanks a lot to take this session, because friends, earlier audit was not a specialized job. We used to do audit so that we can get other work, but now it is more of a specialized job. It's more of a specialized practice. And as rightly said by Sripriya ma'am in her deliberation, that compliance with accounting standard is the primary responsibility is of the management. But compliance with the standards and audit responsibility is not of the management but us. And we have to have a belief that if we have a basic documentation also, we can fight that documentation was to the extent required, or there is some gap, we can upgrade our documentation. But if we don't have anything as such for documentation, that can be an issue, because we won't be able to show anything, and we won't be able to say that we have complied with the standards and say that the audits are as per requirements of section 143, where the standards on audit compliance is compulsory now. Because prior to Companies Act 2013, it was more of a guidance whether auditor follow or not. It is a action which can be taken by ICAI. But now this compliance is a part of section 143 of Companies Act, and compliance with standards on audit is a compulsion now. It's not an option. With that, I would say really thank to Aditya also to have a walkthrough to the software which they built, because in COVID-19 people were having negative feeling and they were staying away. But I think ma'am and her team has taken this positively and did a backward integration, and which is useful. And ma'am was saying she knows only Excel, and then Excel is the master of 90% of the work which we do. And if we follow macros and the advanced version of Excel, most of our work can be simplified and automated. And so that is another area which can be discussed in our second session, which we'll be having on 22nd by CA DS Premnath ji from Hyderabad, who will be speaking how to use MS Excel for statutory audit, GST audit, and tax audit. So friends, if you have any question, you can write up the last. There is no question as such. Friends, all the videos of ACA is available on the ACA YouTube channel. And friends, thanks for joining. There was 125 delegates at one point of time. And thanks for joining for this session. And finally, thanks to our speaker, because she accepted this. And I know now she has been busy with this COVID thing, and we all are busy with the finalization, GST audit and tax audit. But in between her busy schedule, she took time to take this session. Thanks a lot, ma'am. Thanks, Aditya, for chipping in with your IT know-how. And next time we'll look forward to have you as a full-time speaker. Thanks a lot. Thanks both the speakers, and thanks to all the audience. Any question, Pramod bhaiya, you can give a official vote.
Vivek ji, I think there was one question I missed out. Something
sure.
Where the working papers of a component auditor are not available.
Yeah.
What do you do? So I would just like to draw the attention of the querist to SA 600, which speaks about using the work of another auditor. I think where they define what is a component. So even if you look at that standard, it really doesn't talk about working papers. It talks about, what is the principal auditor's responsibility, the guidance process, etc. So I think working papers are the responsibility of that auditor, and he obviously has to share it. But if you find that there is a significant issue, and as a principal auditor, you are not able to perform those audit procedures also, then you might want to consider a qualification or a disclaimer of opinion. But please go through SA 600. It's got the work of using the work of another auditor, and I think the components are defined. I'm not really sure, but I am certain about the standard. So
Thanks, ma'am.
Thank you.
Thanks, ma'am. Pramod bhaiya.
Thank you, ma'am. It was really a wonderful deliberation, ma'am. Thanks a lot to you for your time and your energy, what you had put in for the deliberation. Thanks a lot, ma'am. And thanks to the entire audience who had participated in the session. And we look forward for next session to all of you. Thank you. Thanks a lot, ma'am.
Thank you, everyone. Thank you. We are ending the meeting here. Thanks a lot, ma'am. Thanks, Aditya.
Thanks.